Hello, this is Peter Bell, and I'm here with Mr. David Moore, CEO of Serengeti Resources. Hello, David.
Good morning, Peter. How are you?
Very well, thanks. Today it's July 23rd.
That's correct.
And we have the new corporate presentation from Serengeti to go through. I love this first slide, this picture, exposed oxidizing rocks, it looks like, maybe.
Well, that's right. It's a bit of a generic photo. It's not from Quinnica, nor from Addy, where we're active actually on both properties, but it's a demonstration of the kind of thing we do, which is get out there and walk around, get boots on the ground and turn up interesting things.
And how long Serengeti? How long has Serengeti been going? How many years is it now?
Well, okay. Well, now we're going back decades. It goes back to Dual Resources in 1973.
Wonderful.
Actually, the company with name change, of course, and a few changes of directions. But Serengeti, as it is currently comprised, and my association with it goes back 14 years. So I joined Serengeti in 2004.
Wow.
And made that initial discovery at Quinnica in late 2006, and here we are with a big drill program on the project and advancing this to pre-feasibility.
Wonderful. Great news release recently detailing the consulting groups that will be involved in bringing forward that PFS.
Well, that's right. We've got some industry-leading groups there, and that is really showing. In fact, I was just up on the project the week before last, and we had a group of engineers there, open pit and underground planning engineers, resource geologists, and we had a great visit. And there's a lot of lots of interesting ideas and a lot of enthusiasm here as we advance this project. Things are looking really quite positive.
Well, and wonderful to hear you say that, given how tough it seems to be out there midsummer. A lot of stocks finding weakness in the market, trading down on good news, all these good things that happen. Very contrary, good time to be a contrarian, I think.
Well, yeah, of course, we can't control the broader market. We stick to what we do well, and that's advancing our resource project at Quinnica and out there looking for the next one on the Addy project. And that's what I'll touch on briefly in this new presentation, Peter.
Thank you.
I want to jump to that investment thesis slide. I suppose we've pretty much covered that. Well, there's the experience management piece, and that's me and others. Quinnica, of course, the PFS funded by our partner, and that's in progress right now and scheduled for completion, well, just about a year from now, actually, end of Q2 2019. And then a key exploration asset where we are also active, and I was just communicating with the crew there. They're up there this morning. The Addy project adjacent to Centerra's Camas project, and then a pipeline of grassroots exploration assets as well. Yeah. So lots happening this summer.
And George Tikkanen, one name that I am not quite so familiar with. I gather he's been involved with the company for some time.
Well, that's right. George is, I would say, our lead director, our senior director. He and I worked together for the better part of 20 years, or maybe a little more, at Cameco Resources International. I followed George actually to the Red Dog project in Alaska when he was president of Cameco Alaska. So. Wow. He's an industry veteran, I would say, and he and I worked together for the better part of, well, did I say 20? Yeah, it was about 20 years. And then he's been involved with Serengeti as long as I have, actually,
Wonderful.
since 2004. So yeah.
Well, and knowledgeable about what it takes to build a profitable mine.
Well, that's right. He's, knows not only exploration, but yeah, what does it take to develop a mining project, and that's what we are in the midst of the early stages of doing at Quinnica, I would say now.
Thank you.
So I see you flip to that, the capital structure, ownership, and performance slide,
Yes.
Peter. There's a lot of information here on this slide, really kind of three pieces of information. I guess our current share structure there and cash position. So this is at, it's at kind of mid-month here, mid-July. So about 90 million shares, just under 90 million issued at this point, 102 million fully diluted, about a $6 million in Quinnica Copper Corp, which is the company that's advancing the pre-feasibility study on Quinnica, and on the order of $800,000 in Serengeti. The ownership, and this is something, when I put this into the pie chart, it even surprised me. The ownership of Serengeti, management insiders, so reporting insiders and founders own almost just under 34% of Serengeti, and the balance being retail. It would be nice, of course, to have some institutions in there, but at 34%, management insiders and founders have a very, very significant stake in the success of this company. So that's an important, the ownership piece is important. And then what we're showing on this chart, the share performance, it's a two-year period here from July 2016 to July 2018. There's what's evident here. So we're showing the Serengeti stock chart against the TSXV. Generally, we've outperformed the venture exchange, I would say, in all but one of these periods. And in fact, at this point, we're holding our own and the exchange is going down. So, I guess in that sense, we're outperforming it.
Yep.
What we see here in this two-year stock chart is there's liquidity so liquidity events, if you will, and seasonal trends, and there's strong seasonal trends from August through October in 2016, August through October 2017, and that reflects our activity, our exploration activity in the field, really. And so why is it a good time now, particularly be looking at Serengeti? Just look at the seasonality patterns.
That's right. Here we are in July.
So that's right. So it's seasonality, and then there's some share price volatility here and liquidity events, which of course is what investors also look for.
Certainly. Well, and so many things to discuss here. Maybe just one to point out that you can dilute the project and not the company, and by carving out Quinnica Copper Corp.
Right.
And so you talk about institutional investors in Serengeti. I'd point out you have a large institutional investor in the Quinnica project.
Well, that's right. At this point, Serengeti owns 65% of the project, and the other 35% is held by POSCO Daewoo Corporation, big South Korean trading company. So, well, that's correct. And these junior company, you've got choices fairly simple, really. Either you dilute the company or dilute your interest in the project. And obviously, you need to pursue both of those strategies and do them, at the right time. And we felt a couple of years ago when we brought POSCO Daewoo into the Quinnica project, that was the right thing to do. And looking back at it absolutely is. Here we are in the early stages of completing a PFS study. At $8 million into the project being funded by our partner. That was absolutely the right thing to do. So come, mid-2019, we're going to have a pre-feasibility study. So a year from now, pre-feasibility study completed. Yeah. A project de-risked and still own 65% of an attractive copper gold project in what we feel, particularly in the copper space, as you look forward, should be a rising copper market. So it's going to be, and there aren't many junior companies that could say that. Have a PFS, own a majority stake in a project with a PFS completed on it.
Well, and again, there are different types of institutions. Very pleased, to be seeing you working with an industrial partner. All the stuff with offtake that may come down the line there. And to contrast that with one of the brokerage houses or some other institutional players in the Howe Street scene who might be large shareholders but ultimately might be selling your stock under some situation. That's not at play here because POSCO Daewoo is an owner of the subsidiary company on all these things. So
right, their ownership is in the project, and we management insiders and a couple of our large shareholders here at 34%. Have a very significant stake in the positive outcome here. And
I'm looking at share prices. There's highs of 25 cents, it looks like, as high as 30 cents maybe.
Over
very
30,
briefly.
32 cents. That was in and around some drill results that we put out back in 2016. We've got potential for those kinds of drill results again, of course, as we drill in and around Quinnica. So
wonderful.
So that's the capital structure ownership performance. Of course, all this is happening in British Columbia, which we would argue is really a mining jurisdiction, a solid mining jurisdiction, and that is particularly evident really when you look at a number of recent deals by major companies coming in and partnering on projects. The Hudbay and Antofagastas of the world are doing more than looking in BC. They're investing in mining and potential development projects.
For good reason. There are some monster deposits here in BC.
Well, that's right. Quinnica could be one of them.
Yes, indeed.
So that next slide is just demonstration of Quinnica's location with respect to the Asia Pacific Rim. So we're showing there the road, rail, and power lines that are near the project. So we've got road access basically to Quinnica. In fact, I drove those forest service roads up to the project the week before last and up and down to the project, and there's a major investment actually by government on upgrading those roads, and we like to see that, of course, because that's how we anticipate hauling concentrate out of the Quinnica project when we get it developed, is to Fort St. James, and from there onto rail line and out to the Port of Prince Rupert. So, of course, this is the attraction this explains the attraction of Asian companies to projects in British Columbia. It's had access to the Asia Pacific Rim.
Thank you. I was not aware the road went so close to Quinnica there.
Well, there's a road that goes right to the deposit. There's about a 30-kilometer section there of Forest Service Road that we, as project proponents, would have to upgrade. But the balance of that network is in good shape and is being, as I say, being upgraded as we speak here this summer.
Wonderful.
So that's the access economics. This next slide here just harkens back to our 2017 economics, the PEA economics, and it was it's a reasonable project. We see strong potential to improve those economics, and we're rescoping what we're looking at in that project. But even on these economics, $190 million NPV at a 7% discount rate, Serengeti owning 65% of that. Of course, that's fully valuing that at $120 million. Well, we're trading at 1/10 of that value. there's really some scope for re-rating here, and I've got a slide that speaks to that here in a minute. So, but before we get into that, I mean, what are we doing at Quinnica this summer? And that's on this next slide here, Quinnica pre-feasibility, really advancing the project towards production. So we're targeting a reduced capex from the PEA study, and we're doing that by focusing our pre-feasibility study on the high-grade central zone, the copper-gold zone, better grade, simpler development footprint, so focus on one deposit rather than two.
Yep.
And that simplifies the development plan, should bring down the capital cost, bring down remove some environmental issues and so on, simplify the project basically. So, that's how we're going to get there. Well, we've got a significant drill program happening right now, as we announced there a few weeks ago, 3 weeks ago. I suppose mobilized 2 drills, and we're actively drilling there on the project. Of course, drilling is just one of the many things that we're doing there this summer. We've got engineers, and I was part of that visit last weekend, looking at underground open pit mine development scenarios. We're gathering environmental data. We're looking at waste rock tailing storage facilities, all the things you need to look at in a pre-feasibility study. And so far, it's green lights all the way. So very pleased to see that happening. So our drill program this summer, really, I describe it as the 4 E's drill program, and that's engineering for development scenarios, basically, so drilling directed towards that. Drilling directed towards enhancement of the grade. We had developed some ideas in 2016 that there could be, one long hole we put through the deposit, a preferential direction that had higher grade gold values in it. We're testing that idea this summer. Of course, E for expansion. We're looking for more tons in and around the resource, and a number of the holes that we've got going into the deposit or near the deposit are directed towards that. And then E for exploration. I mean, there's some blue sky here. So 4 E's equals an excellent drill program, I'd say. So, all of that is, is in support of this mine project that we're looking to develop, that's got an anticipated annual production again from the PEA, and we're looking to improve this over the first 8 years of 50 million pounds of copper a year and 70,000 ounces of gold. Yep. Well, it's about 180,000 ounce gold equivalent per annum. That's a significant project. And of course, all that's being funded by our partners, Pasco Daewoo, with this $8.2 million investment.
Well, and I love your 10% management fee as well that you collect on eligible expenses.
Well, that's right. That's 10% on all the project expenditures, and then we can net back to us also the 30% mineral exploration tax credit, which is on eligible expenditures, and that's where the eligible comes in. So our drilling expenditure, for instance, which this year is going to be, $2 million or north of $2 million, will recover close to 30% of that, and that's net back to Serengeti, not to Quinnica Copper Corp, to Serengeti. So that's a big part of how we run the company here for the next couple of years, without further share dilution.
Absolutely. And that 8.2 million, do we have a timeline?
Well, yeah, the 8.2, we've spent 1.2, of course, was the initial earn-in by Pasco Daewoo. The $7 million is what's being invested now in Quinnica Copper Corp, and what's being spent over the next year completing that pre-feasibility.
That's right, yep.
So that's Quinnica. All that really relates to this next slide, and that's a copper supply deficit and Serengeti re-rating, or we would reckon a re-rating that we should get as we de-risk this project in a rising copper market. And that's what the slide on the left here really show. It's a copper demand supply gap and forecast anyway from 2018 through the mid 2030s.
Yeah.
And that is largely driven by electrification, not just electric vehicles, but electric distribution. A very significant increase in copper production, in copper consumption.
Well, and talk of deficits already this year.
Yeah, I mean, we've had the copper market slid backwards a bit there, but I see it's gaining strength again.
Oh, the spot price jiggles and jangles. Have you ever seen a tight copper market, really, globally?
Well, certainly, and and I think, what this rising demand and supply gap is coming from the fact that, we had a tough copper market in the last 5-6 years, and that led to a disinvestment in copper exploration and copper development. At the same time as we're seeing an increased demand for copper in all of this. It's a battery metal. It's an electric metal. So that combination really spells good things for copper in the future.
Yep.
That, of course, then you look at valuations on basically price to net asset value. We're currently trading as $12 million value, about 0.1 of our PNAV. As we advance the pre-feasibility study, we should really benefit from a re-rating.
Multiple expansion.
As we de-risk the project. Yep.
And not just an increasing multiple, but an increasing resource base potentially on which that multiple.
Well, yeah. I got to be careful with forward-looking statements here, of course. But drilling in and around the deposit here is going to give us. It'd be surprising if we didn't get some great results out of that drilling. Put it that way. So that's Quinnica. Turn now to Addy, maybe just for a few minutes,
yes,
and got a few slides on that, and the Addy property, and in combination with the UDS claim block that we've had for a few years now, and did a small drilling program on last year. The focus here for this year and going forward is the Addy property, and that's a key acquisition immediately adjacent to Centerra Gold's Kemess project. And this is a piece of ground that I had my eye, I had more than had my eye on, that I negotiated for the better part of 4 years actually to acquire. Was really pleased to be able to do that earlier this year and towards right around PDAC this year. Acquired that key block of ground. So in combination with our existing claims there, we've got just under 6,800 hectares. That's 68 square kilometers of highly prospective ground on the doorstep of the Kemess operations. So, if we go to the next slide, and the rationale behind the Addy acquisition. What is Kemess? Well, Kemess there's a past producer, past production from Kemess South. 3 million ounce gold producer over 13 years, 360,000 tons of copper. But the real upside comes from what Centerra and its predecessor companies have done at Kemess Underground and Kemess East, where past or proven and probable reserves, and there are reserves at Kemess Underground, and then measured, indicated, and inferred resource on Kemess East. Aggregate almost 6 million ounces of gold and 1.2 million tons of copper.
That's exactly. That's what it is.
So this is a significant, really significant gold copper resource sitting right on our doorstep at Addy, and we see the potential on the Addy claim block for the faulted extension of the Kemess East deposit up onto our claim block, the Addy block, that we've acquired an option, and it's an option to acquire a 100% interest in that project. And what we did was put together, all of the prior work there that, it's dating back back to the early 80s, actually, almost pre-discovery of the Kemess system. Just put together all that information, the geochemistry, the geophysics, a little bit of shallow drilling that's been done, and this geological idea, which we think is very much substantiated by all of these data sets, that we very likely have the faulted offset near surface target, I should add,
yes,
of one of these deposits. So we're looking for the fourth deposit in the Kemess district here. So it's a great, highly prospective piece of ground. So I show in this next, so this first view was a plan. This is a kind of a, this next view, the Addy opportunity, is a cross-sectional view of a surface topographic model here, and we show the target area, and then what we are expanding with our current geophysical program that's underway right now, actually, is an appealing kind of deposit size geophysical signature that had a potential deposit size that had been identified by the previous owner on this project, and they did a single line of deep penetrating IP. We're expanding that coverage over a target area that's 4 or 5 square kilometers, where we've got good evidence of anomalous copper gold geochemistry, the right rocks, and on sparse geophysics here on this one section, the kind of deposit signature we're looking for. So our IP program is now stepping out, and in combination with relogging some shallow previous holes here and resampling them, because they'd only been sampled partially, and some geological mapping. We're going to have one of the best mappers in the business here in August. All of that should lead to very high quality drill targets.
And the IP that you're doing now, is that the Titan again?
No, it's not. Titan is expensive.
Yeah.
Titan is really expensive, but we're using a large array, pole dipole pole kind of simultaneous surveying array that we've used with some success at Quinnica, for instance, in the past, and was in fact the anomaly that we used that same system at UDS that identified a new sulfide system. Now that's, that IP, of course, just maps sulfide, doesn't necessarily map copper, but what we've got here is anomalous copper gold geochemistry. We're right on the doorstep to a deposit. We need to find out how large that sulfide system is, and then target our drilling accordingly.
The structural story that you've told here too is just wonderful as well. So
it's it's a great target. So it's we reckon the left, you can see on that diagram, the left lateral offset of the Kemess East system. So our aim, as we say there, is find the fourth porphyry deposit in the Kemess district on the Addy property.
Let's do it again. Right?
Absolutely. So that's Addy, and then very quickly, I think generative exploration, because when you're in the exploration business, you need to fill a larder, as it were, and take a shot at grassroots opportunities, and we've generated these ourselves. We staked all of these back in January, and they're copper gold targets for the most part, based on a large government geophysical survey that had been flown. I would highlight the one target here, which is a little bit different, and that's an attractive cobalt nickel target. And it's not a porphyry, but something that was evident from the detailed aeromagnetic survey that was flown, mapped out in ultramafic, and in combining that with prior government geochemistry, showed a very strong cobalt nickel response. I actually couldn't, it's different, but I couldn't help myself looking at that kind of geochemical response. So we'll have a look at all of these this summer, and with a particular focus on that Trum property. So, well, that's just about wraps it up then, Peter. Serengeti investment case is on that last slide. Experience management, the Quinnica development project being advanced over the next year, partner funded through completion of a pre-feasibility study. All kinds of potential to expand the resource, find some higher grade in the central zone, and deliver that study in we reckon a rising copper market a year from now. And then that exploration pipeline, let's do it again. We think this Serengeti or Quinnica is the steak, if you will, and Addy is the sizzle. So we've got both.
Yep, certainly. Well, and some nice creamed spinach maybe with truum and stuff like that on the side.
Yeah, well, that's right. I mean, when you pick up these early stage bets and you get boots on the ground, you never know what you're going to turn up.
And what kind of boots on the ground? Staffing and team-wise and everything?
Yeah, we've got a large team of people, of course, at Quinnica right now. I mean, it's probably varying between 20 and 30 people working on the project. Addy, we've got a crew of 13, I hear, this morning there, working on the project. And then we will, towards the end of the summer, hopefully free up a few people from Quinnica and then our geologist at Addy and go off and look at some of these early stage bets.
Well, and most of the time I'd be very concerned to hear about a junior with so many irons in the fire. But coming back to you and George Atikanen again.
Well, I've got some gray hair, and I guess I've earned that gray hair. But I mean, this is I like this time of year. It's fun, and it's great to be drilling holes and gathering data again. We're back in business.
Thank you very much for taking some time to speak to everyone. Thanks for listening. Goodbye.
Okay. Thanks, Peter.